We are glad that you are part of the RFD TV and the Rural Radio Channel 147 family. I'm John Jenkinson. Thanks a lot for being here with us today. Let's go to the grain market. Corn is on the higher side by 2 1/4 cents on the December contract, just approaching that 360 level. We're at 359.5. We've been as high as 361. And July is up 1 3/4 at 385. Soybeans on the weaker side, though. November down 5, 842 1/4. July soybeans down 4 1/2 at 893 1/4. December Chicago wheat up 5 1/4 at 527. July Chicago wheat for that new crop is up 3 3/4 at 559.5. December Kansas City wheat up 3 3/4 at 529, and July is up 4 1/4 at 565. December Minneapolis wheat up 2 1/4 at 584 3/4. July up 3 1/4. 615, and that's on the high of the day, by the way, on that new crop Minneapolis wheat contract. December cotton today is on the higher side, but not by much. 1.7914. Let's go to the edge of the trading floor in Chicago, and there at the CME Group, Scott Gecas, Longleaf Trading, stands by to visit us. And Scott, what's the volume like today on this Monday?
Yeah, it's pretty slow across the board. You're looking at volume levels roughly around 50% below normal volume. So it's pretty quiet going into pretty much a big week. We have FOMC, a bunch of headline risk with tariffs going back and forth. So traders pretty much on the sidelines just waiting for some type of news to react to the market. But right now it's pretty quiet today. Don't expect too much coming out. So we're going to see how this is going to be playing out in the short term.
A little bit of strength over here in the corn and the wheat market today, but soybeans slipping and going backward here especially from last week.
Yeah, in the soybean market in particular, it's being drawn down by the huge short position in the soybean oil. It's about 606,000 short contracts. That's one of the highest on record. So that is pushing the market a little bit lower just based on that. Exports are picking up slightly, but there's still supply concerns looming. We're looking at that 850 level as a key resistance level.
How much of this continued talk about tariffs and whatnot, how much of that has been built into the market, do you think? And the reason I ask that is in case we continue to have some more announcements on tariffs.
Yeah, well, this reminds me going back to when North Korea was launching rockets. When they would launch a rocket, market would move dramatically. 2 weeks later, they would do it again, market would move. The third time, market didn't do anything. So with the tariff talks now, and that's what we're looking at. The market's not reacting to the increased tariffs. So it's shaking it off. That was definitely brought to light last week when the market was up about 150 points or so, going into the trade war talks with the announcements of more trade war talks. So it looks like the traders are getting sick of the headline and just waiting for something to materialize.
Interesting. Scott Gecas here with us at the edge of the trading floor. When we come back, we'll be visiting with Scott about the livestock trade. We're going to visit with you, too, and bring you up to date on those numbers. That's next here on the Market Day Report. USDA released its cattle on feed report on Friday after the markets closed, and it actually came in just a little bit above what some of the expectations were. And that got the live cattle and the feeder cattle off to a little weaker start here today. October fats are down 98 at 112.10, December down 143, 117.02, and February live cattle down 107 at 121.18. Feeder cattle market also weaker here today, with October down $1.73 at 156.35. November feeder cattle down $1.85, 155.95. January feeders down 147 at 153.38. Hog market also has weakness to deal with of its own in some of the deferred contracts, but we've got that nearby October up 85 at 61.15. The December down 15 at 57.25, February up 16 at 65.08, and the April down 4 at 69.88. So overall, until you get to the April and the May contract, this hog market is on the higher side here just a little bit. Let's go back to the edge of the trading floor and get analysis of all of this. Scott Gecas, Longleaf Trading, standing by here with us. First of all, the cattle. Weaker here today. In comparison to where the trade thought that the cattle on feed report was going to be, do you think that this market is in line with the little bit of a more bearish tone to it?
Yeah, well, the cattle on feed report came out around 107.4 or so versus that 105 price target. But I mean, with all things said and done, I mean, even with that bearish report, the cattle market is definitely holding a little bit stronger than what most people thought. So the cash did trade around 111 over the weekend or so. So that was a little bit positive. The fourth quarter production is expected to be up around 6.3% versus last year. So we're still running into those short-term supply concerns. We are keeping an eye on the 112 level. It's just in the short term.
What about over here on the hogs? It's kind of interesting to see you have to go all the way out into the deferred contracts, clear out in 2019 before you find real weakness. We've even got strength here on the nearby. Is this still related to that hurricane last week or 2 weeks ago?
Yeah, it's related to the hurricane last week, a few weeks ago, as well as the African swine flu in China. They keep refining more and more reports for it. It's obvious that it's not contained. You know, when you see a report day in, day out, at that adding to it, still starting to spread into Europe. Chinese imports were about 11% higher versus last year. So that's starting to pick up. We expect to see a little bit more imports to China, especially with that African swine flu looming. So we're going to watch and see how that is really going to play out here in the short term. We're watching that key level in the front month around that 60 level.
Scott, what do you think about this protein complex as a whole? Is it just kind of drifting sideways here until it gets news one way or the other?
Yeah, I mean, you got to remember that all the economic data coming out of the states is positive. More people are working. You're seeing unemployment rates at 49-year lows. So with all that being said, people are working more. They're spending more money at the grocery store. So even with the short-term supply concerns, we still expect to see relative strength in the protein market across the board.
Okay, Scott, thank you very much. Scott Gecas, Long Leaf Trading, here with us. Always good to talk to you, sir.